What's up, guys? I am going to wait for about 30 seconds to a minute. Just let everybody get in. And I also need to get myself set up so I can see what the crack is. Okay. Alright, we should be good to go. I'm going to get straight into it, man. How you doing, JT? I'm not sure if I need to keep this up, but I'll keep it up anyway. That's fine. I want to talk about Bitcoin, all right, and this kind of idea of 100,000, and I want to talk obviously about this chart, something that I've marked up, and I want to go through, you know, some ideas on what a pullback looks like, and kind of map out what it is that I'm looking to do if it works the way I want it to. Lobo, how you doing, man? Can you guys hear me all right, yeah? Let's take a look. According to this, we've got 4 people and climbing. Can hear you just fine. Fantastic. All right, sweet. So I'm going to get straight into this, and obviously if anybody wants to watch it afterwards, obviously, you know, you can. And I don't want to spend too much time on this. I don't want to go over, you know, the kind of broader spectrum and broader analysis and all of this type of stuff. I just want to predominantly focus on Bitcoin. And I want to talk about this idea of 100,000, right? And I'm going to start with, if you buy Bitcoin right now and you hold for 100,000, whatever that looks like, yeah, for a dip, you know, it drops all the way to 0 and goes all the way up to 100,000. It doesn't matter. If you buy it right now, and at some point in the future it hits 100,000, you're looking around about increasing your, you know, your whatever you've put down by about 170%, right? And this is something that I want to really emphasize, you know, not the 170% per se, but this idea that price doesn't matter, yeah? I know the argument is, of course, it does, because if you buy at 15, you're going to make more money than if you buy at 37,966. I get all of that. But what I'm saying is, if you take a step back and you kind of look at, I'm going to put 10 grand in and I'm going to turn that 10,000, you know, into plus 170%, right? And it doesn't matter what happens from now until then, as long as it hits 100K, I'm going to make money, right? So we know this 100K is up here. Now what I'm going to do is I'm going to just put the chart back to how it's supposed to be, like this, because obviously the 100K is all the way up here, and I want it to be like this so we can see what we're looking at, right? And I'm going to go forward on the premise, right, that we've waited, things are a mess, we're expecting a pullback, we're not expecting this kind of multi-year bull run yet, and we still have plenty of time to position ourselves into Bitcoin. And I'm going to, like I said, focus predominantly on Bitcoin, but we have time to focus on Bitcoin and start to scale in. What does that look like, right? You know, now as Bitcoin starts to pull back, and I'll say this now and then I'll get back into what I was saying. If Bitcoin starts to pull back and it shows clear, definite signs, you know, that it's a rally and a down, you know, just a rally and a downtrend on the monthly chart, and it's showing some real signs that it's going to continue going lower, you know, 25, 22, sub 20 and so on, then obviously I'm going to wait, right? But we're going to go forward on the premise, right, that we see something, you know, like this, where it starts to pull back, and then perhaps we get a little bit of a bounce, you know, at 32, because 32 is a key level. This is why it's still there, big, strong yellow horizontal line, you know, and then perhaps maybe we get a little bit more of a run lower, you know, and then maybe, you know, a pretty significant rally. Who knows? You know, let's make it really messy, right? And then a drop, you know, small little bit of relief, you know, as it's within the rebalance range, you know, and then we get a pretty significant drop again, you know, and it stops just there on the rebalance point. Now, let me zoom in a little bit, right? And I'm going to do this so I can just bring it up a bit. Now, let's say we get something like this, right? The range of what I've just drawn on the chart is about 8,000 points, right? $8,000, almost $9,000. We'll call it $9,000. That's a $9,000 range. And you want to start thinking about what that math looks like for you, right? Everybody has varying degrees of money, you know, and available capital, you know, and so on, right? Sorry, my voice is getting a bit croaky. 1 second. Everybody has varying degrees of what they're looking to do, right? And I'm not going to be, you know, annoying by saying, oh, let's just start with 100 grand and let's do this. Everybody's different. We all have different varying degrees of money, ideas. You know, I could say to you guys, buy exactly at 32,477, and then another one at 29,290, okay, and then don't do nothing until it hits 25,041, right? And we will all get it wrong, yeah, including myself. We can't. You can't be exact. Even when you put limit orders in, you know, you may not get your limit order. You may get a bounce and then it just rips and you're like, wow, I missed that one. You know, there's so many variables. So we can't use a one fits all. We can't use basic math. We can't use 100K. But what we can do is we can look at all of this and say, all right, look, regardless of whatever your situation is, whatever it is you're looking to do, we'll go forward on the premise, right, that you're thinking about how to get into Bitcoin. You believe that it's going to go up to 100K. That's the idea that we have. At some point, it's going to go there. I've always believed this. You know, I've never once deviated from that 100K level. How it gets there, that's a completely different story. But I've always maintained this $100,000 Bitcoin, which I think is very doable and it's reasonable. It's not stupid. It's actually reasonable. You know, we peaked around about 69,000. You know, you're talking another 100, you know, another 30, 31,000, you know, or 30,000 before it hits 100K. It's really not that big of a deal, right? So if I go forward on that premise, right, that it is going to hit 100,000, how do I get in? All right. Now, we can say price starts to drop, you know, and let's say we pick up our first, and remember, everything that I'm about to outline may not happen, right? But let's say it drops to 32. That's a great point. And I want to be really clear. I know I'm stopping and starting, but I want to be super, super clear, right? Because I get a lot of grief. You've seen the message that I posted in Discord today. You know, a lot of grief from people saying one thing or another. You know, the clarity is this. Anything can happen. Price could come all the way down, you know, and break 10K, or it could just rip from here and go all the way up to 100,000. Nobody will ever truly know what's going to happen, right? But we have a great idea based on the analysis that we do. So I'm going to explain what I'm looking to do if everything sets up, because now we're in a position where what is happening has happened. It broke that 32, like I said. It started to climb. It's ran a little bit, peaked out around about sort of 38, and now we're potentially starting to pull back. And I keep saying it, pullback. The pullback is absolutely key. That's the most important thing for me now, because it's going to tell me whether or not I should be accumulating here, right? So we're going to go forward. We're going to go, like I said, we're going to go forward on the premise of this 100K Bitcoin, and we're going to wait for price to start to pull back. It hits 32K, right? You grab some. Doesn't matter how much, you just grab some, right? And you spread it out. You know, again, I'm not going to go into the math of what you should be doing, 10% of your capital and all this sort of stuff. Just you grab some at 32. That's what I'm going to do, right? So if it confirms and I'm confident, and this is purely if I'm confident, and the analysis is there, I'll grab some at 32, and if it goes and breaks 38, I'd grab some more at 38, right? So there's two key points: 32, and then if it rips from there, it gets back above 38, I'd grab some more at 38, but only equal. If I grab one Bitcoin at 32, I would only grab one more Bitcoin at 38. I wouldn't get two Bitcoins. I wouldn't get 0.5. I'd get half. I'd get the same amount, because then you're bringing your average cost up to around about 30. Well, it's not around about. If you grab some exactly 32 and you're in at 38, what are we talking? 6. So you're basically in at 35, right? Your Bitcoin would be worth 35K on average, and you're already in profit by 3,000, and then the potential run to 40, 42, 45, and whatever else, right? So that's where I'd start. If it hits 32, I grab some at 32, it starts to drop a little bit lower. You know, I wouldn't immediately just buy. I'd be looking for a place where it actually makes sense. Now, you'll notice that this green line is in the middle of nowhere. The green line is actually a weekly level. I don't even know why I'm going down. Sorry guys, 1 second. So sorry, the green line is the start of the liquidity pool on the monthly chart, right? So if the monthly chart starts to pull back like this, it's not going to look jagged like this, but let's just say it starts to pull back and it hits this level. This is a really, really strong level, really strong, 29,266, right? Just below the whole number. You may get a little bit of overshoot, which has worked out perfect on the example that we've got here. But if it does break 30, you know, I'd expect some, you know, some pretty solid, a pretty solid reaction from there, and it would probably hold at this level. And this is why I started it here as opposed to starting the LP down here at 28, right? That 28 is just a byproduct of being within a larger liquidity pool. So if it does get down there, I'd expect, you know, some sensitivity, some stability, and so on. If it continues to go lower, this is where it gets really interesting and where it gets a little bit dangerous, right? We're in at 32. We'll grab some more here at 29,266, for example, you know, and then as it starts to run a little bit deeper, this level, the red level, at 2475, right? 20. Let's just call it 25,000. So this level here, there's so much liquidity build up here. The expectation was, it was going to rip through this. The scary thing about what we're seeing is we never saw a dip through this and a reversal, right, and then a move up. If that happened, this move would be so much stronger. Yeah, this recent rally would be so much stronger if price dropped, took out these two lows, rebalanced, and snapped back, leaving a pretty strong wick or a pretty strong tail behind or something of significance, you know, and you get that kind of snapback. Then it rallies, because then it shows that it scooped up that liquidity, right, to offload a little bit higher. We didn't see that. We just ran a little bit, right? So we're still within this kind of general rally within this downtrend at the moment until we can confirm that it's actually, you know, a kind of shift in momentum and a shift in flow, right? So let me just do this. So with that said, if it does get down here, this is for me the danger point, you know, of it reversing, because you've got to really think about how this plays out. We've already rallied 1, 2, 3, 4 weeks. So if it reverses and it gets down below these lows and starts to stabilize here, that means the most recent move has just been like invalidated, you know, and then going up to the monthly chart, that would be a complete rebalancing. So it's hit the rebalance point, it's responded from that. If it starts to pull back and it gets below this low, this is in classical technical analysis terms, it's a fake breakout. It's a false breakout, whatever, you know, which way you want to talk about it. So that move, the most important thing for me as it's starting to pull back is we need to see structure forming in a way where the distribution and the accumulation of Bitcoin is favorable to the upside. That's not always easy to see, you know, and it's free gender. I'm still waiting for 1850. Oh, is that supposed to be 18,500, or are you talking about 1,850? That's all the way down here. Wow, that's a big movement. I'm assuming you mean 18.5, right? Which would be roughly about here. So if we put your 18.5 on, let's just say it's somewhere around about here, give or take. Yeah, about 18.5 there. Yeah, sweet. So, you know, and it is possible that it gets down there. That 18.5 level, right, basically, there is a very strong area just here, right? And it actually does line up with around about 18.5. It's a little bit lower than that, actually, but it's 18.385, probably 18.3. But that would literally just be a complete rebalance. And then if it goes from there, and it really starts to, you know, get some headway, then that would be, for me, this would then be the bottom. But again, we're miles away from that, because obviously the monthly takes such a long time to form. But the whole point of what I'm trying to really get across is, you know, this kind of mapping out and outlining of what I'm doing. It allows a person, right, to invest in a way that's clinical, right? You're saying to yourself, look, the idea that Bitcoin is going to hit 100,000 at some point, right, is a solid idea, right? Let's look at that for a second, right? How strong is that idea that Bitcoin's going to hit 100K, right? Is it viable? You know, is it Does it make sense? Do we have anything, to confirm that? And as you start to think about this 100k Bitcoin, as I said, I personally believe it's viable. I personally believe that it's probably going to, well, it's not probably, but I feel very strongly that Bitcoin will eventually get to 100k. So then the idea becomes, if I believe that, then I have to have an investment strategy around that idea, right? Because there are traders who basically just, they trade Bitcoin and they make money, on their trades. You've got the maxis who just basically just keep buying Bitcoin. They say they're not interested in money. They obviously are, but, there are some real sort of hardliners who are just, yep, I'm buying Bitcoin forever and I'm giving it to the next generation and so on. And they really think they're doing something good for humanity. And then obviously, you have the investors who want to make money. They want to position themselves, and they're just normal down-to-earth investors are just looking to make some money on Bitcoin. And from here to 100k, there's more than enough, to do that with. And one of the things that I didn't quite mention is this. So if we just get the 100k back up here, right, and we just kind of zoom out, look at the distance that you have to play with. Yeah, it kind of puts into perspective, this idea that, oh, we missed 15k, oh, we missed 20k, oh, we missed 25, oh, we missed 30, and so on. But it puts it into perspective because, as Bitcoin starts to pull back, which it will, Bitcoin is going to pull back. I mean, it's not just going to keep going up in a straight line. It may stabilize and then run, but ultimately, you are going to get a pullback on the monthly chart. And when that happens, it is probably going to baseline around about 32k to around about 37. So somewhere around here, as it goes and then it starts to pull back, this line is very, very important, right? And however long that pullback takes, if we say, and I'm going to use Free Genders level here just for a second, we stick that box just there, right? From this box, look how much room we have to move to 100k. It's insane. Right? There's so much movement, so much area, so much that we can get through in terms of void. That picking up Bitcoin anywhere within this area makes sense. Yeah. Even if you buy one Bitcoin at 50k, yeah, you've doubled your money when it gets to 100k. And then it's possible that you go through this whole sort of, remember, if Bitcoin hits 100k, we're probably going for a multi-year run, right? It might, keep going, 120, 150, potentially 180 and so on. Then it pulls back and it creates this whole new complete structure. So we see all of this entire movement basically duplicated. I have no idea what that is, but basically duplicated like this. And we see the whole thing again up here. Right, and I'm going to have to do this just to kind of show you, but we see the same thing again. So we have one picture here, and then that picture is effectively transposed over here, and it creates a whole new paradigm. But not paradigm, sorry, it creates a whole new fractal. But then the most important thing is both are contained within a much larger move. And then the fractal keeps going and keeps going and keeps going because ultimately, other factors in play like inflation, deflation, economics, the various things that happen around the world, the flow of money, the order flows, the ins, the outs, the changes, the new tech and all of this stuff. It's all kind of swirling around and we start the whole cycle over, all over again. So there is plenty of movement within these areas, right, for us to consider that this pullback is a buyable pullback as long as we can confirm that that is indeed the case, that it's not a rally in a downtrend. Now, I still have the idea that it is a rally in this downtrend, and as such, this is why this red level is absolutely key. 25k and slightly lower, this is absolutely key, right? If it gets below this swing point, it invalidates the latest move up, right? But we know Bitcoin can come all the way down to roughly about 27k and bounce from there and really start to go. So we're going to have to really hone in as Bitcoin starts to pull back in all of this area here between, let's say, 26.5 to around about 32,000. So 26.5 to 32,000 is the sweet spot for us to break it down, to look at it on a daily basis, to keep an eye on the weekly, the daily, the 4 hour, even down to the hourly to see what the order flow is. Keep an eye on COT data, keep an eye on the accumulation and distribution phases, right, that are happening within Bitcoin, and then obviously have in mind the halving next year and so on and so on. And as all of these things play out, and Bitcoin is pulling back, we can keep an eye on gold. We can keep an eye on the broader markets. We can keep an eye on, the broader cryptocurrency market. Are alts moving? Are they not? Is there more stable coin being minted? Do we have an overshock of supply, right? Is liquidity picking up? Is there more inflows of liquidity coming into cryptocurrency? Or is it continuing, or, is the continuance of manipulation, of basically printing stable coins, moving these markets, allowing miners to basically take their profits, and then having, like I said, a diluted stable coin supply out there, that is just not backed by 1-to-1. It's probably closer to 1 to 0.5 or 0.4, 0.3. So again, lots of things to consider. I didn't want to go too crazy with this video or this live. I just want to get some ideas out there. We've been talking for about 20 minutes, which I think is a great time. I'm more than happy to stick around and answer questions and go through some stuff. But I wanted to talk about this because, like I said, I'm watching this now. I'm really focused on this kind of pullback on Bitcoin, and I want to try to position myself in a place where it actually makes sense if this pullback is correct and it validates what I've been saying. So the idea for me was 14k or lower, right? That's where I wanted to buy Bitcoin. It didn't get there, so I can't buy. Yeah, and I am that rigid with my rules. I just am. I know there's other people that bought at 15 and 16, and I know one person bought at, I think it was 18.6, which is a great price, but it's not enough for me. I wanted to see 14k, and I'm more than happy to wait for the confirmation, because I don't care whether I buy it, and I've said this so many times. I don't care if I buy it 28, 32, 36, 40. I don't care, as long as I leave enough room between where I'm buying, and there is a cut-off, obviously. I wouldn't really want to be buying above 50, but I want to leave enough room where I'm accumulating to get to that 100k, where that movement is a pretty decent chunk of money. Yeah, and after that, I don't really care, because obviously I'm not interested in buying Bitcoin to buy Bitcoin. Yeah, I don't care what Bitcoin does. If Bitcoin, think about this, if Bitcoin does become all of the things that some of these maxis and some of these Bitcoin enthusiasts say it is, then we will all benefit from that anyway, right? If it becomes a medium of exchange, then we're all going to be using it by default. That's just the way it is, And if not, then there's going to be two economies, right? You're going to have two separate economies. You're going to have people who are going to be using Bitcoin or Satoshis, and you're going to have people who are basically just using whatever's out there at the time, which is probably CBDCs. If you're free to say what's the best oil ETF to buy, oil ETF, I don't know, because to be fair, I just buy crude. To be honest, free gender, I just buy crude. I don't really focus on ETFs. I'd be more interested in, like, if I was going to buy oil, I don't actually buy the oil. I don't futures trade oil either. If I was going to trade oil, I would use IG Index, and it would be classed as a spread bet, so I don't pay tax for me. So I've never really looked into sort of Bitcoin ETFs and stuff. On Wellball, I'm not able to buy that. Right, okay. Let's take a look. Smart way to invest? I don't think so. Best oil and gas ETFs. I've got 43. Charts, trade. Ultra short Bloomberg crude oil. So that's obviously a X'd inverse. Yeah, inverse fund. Ultra short. Yeah, so that'd be, I wouldn't touch that. XLE, energy sector ETF. It has oil in there. Micro sectors. There must be. I mean, I'll be honest with you guys. I've actually never looked into this because I've always spread betted oil. To be fair, just crude. But there must be. You've got obviously the SPDR fund, which is XLE, which again, it's the XLE's of the energy sector, or the energy ETF. It's good. There's a broader USO. Yeah. Oh, yeah. 1 second. No, that was wrong. 1 second. Sorry. I don't know. No, sorry. Let me just check to make sure that that hasn't gone off. Yeah, that's fine. So let's use our VIX. United States Oil Fund. Yeah, I'd probably trade this if I was going to trade oil. But the issue that you're going to have, and the reason why I trade US oil, is because it gives you the volatility to trade it. Yeah, I've never invested in oil ever. I've always traded oil. Yeah, and it's on the rare occasions that I've actually traded oil, it's been because it's extremely volatile. And I will say again, extremely volatile. This thing is insane, right? You could be at 78.39, and then all of a sudden, oil's at flipping, $81, which doesn't seem like a lot of movement, right? But when you're spread betting or trading oil, it's insane. So for me, maybe USO, but you want to find an ETF that is, like for example, you've got the S&P and then you've got the SPYs, or you've got the NASDAQ and you've got, the Qs, then you've got the diamonds for the for the Dow. You want something that is basically going to replicate it, so you're trading the actual underlying movement as opposed to trading something like USO, which looks nothing like oil basically. No, spread betting. It's only in the UK. Spread betting isn't available outside of the UK. It's a way to, so basically spread betting allows you to put they class, if you have a spread betting account with a broker over here, it means that you are entering the market as a gambler, as a bet. You're placing a bet, and you're not getting taxed on your winnings, as long as as long as spread betting isn't your main source of income. That's it. So if you make £1 million spread betting, you're going to get taxed on that, because obviously it's a huge amount of money, and you can't say, well, it's a spread bet, when you're making 25 grand a year. It's just never going to happen. But if you're making 25 grand a year and your spread betting's pulling in 10, 15, 20 grand a year as well, you don't get taxed on that. It's really good, to be fair. But again, it's not available in outside of the UK. Yeah, Dylan, what's going on, man? I did see your video. I'll get through that tonight, mate. Yeah, I'm good. I'm really, really good. So, yeah, that's Bitcoin. That's what I wanted to go through. I think it's important that you plan out, and we plan out what we're doing going forward. And as we continue going into the remainder of this year, I'm not really, and by the way, the 25,508 and the 30, basically 38, these two levels that I made a price note of, this is a range, where between 32, which is the kind of baseline, very, very strong level, and is in control of pretty much most of this movement, in terms of it was resistance, and now it could potentially become support, as price kind of deviates and moves around these areas. But 38 to 25.5, if price gets below 32, it doesn't necessarily mean it's bearish, in this idea that we're talking about. And I know people are probably like, do you know what? It doesn't matter. I'm just going to talk, and if people take it the wrong way, it doesn't matter. Like, I'm trying too hard to just try and please everybody. If it gets through 32, it doesn't necessarily mean it's just a completely bearish move. But if when you list it like this, and when you show it like this, the closer you get to 32, the more likely you are to get a reaction. The further away we move below 32, right, the more likely we are to run this danger area down here, this area where there is a huge amount of liquidity. The further away we get from 32 to the upside, the more stronger a pullback will be in the sense of its bullish nature. So if price did get to 48 and then it starts to pull back, 32 becomes less of a problem. If we do finally get back down to 32, if it does get to 48, that's a problem. That's a big problem, because it's stopping the move. It's running out of steam. It's coming back to an area where there is a huge amount of liquidity, where you have these liquidity pools, where price basically spends a lot of time, to accumulate and distribute. At the moment it's 32. That could become 40. That could become 44. It could potentially become 28. But at the moment it's 32. So, again, some things to consider. And that's it. I'll quickly go over Binance. Again, not a great deal's changed for Binance for me. We're really just kind of waiting, for an opportunity, where price drops, gets below this 200, which for me it's still on the cards. And yeah, that's that. In terms of altcoins, I'm not really watching or looking at anything else. I'm not accumulating anything else. In terms of the dollar, I did want to see it a little bit lower. I did grab a very small amount at 105.12, and I was out, for a quick 30 pips. I didn't really do much else after that. If it does start to pull back a little bit more, I don't really like the way it's doing this. I would have preferred this drop just there on the dollar to go a little bit deeper. About 104.50 would have been great, but we didn't quite get there. So the idea really was accumulate a little bit of dollar here as it starts to run, accumulate a little bit more, and then go for a run as it starts to take these highs out to around about 108 and then get out. But it didn't really set up the way I wanted to, so I just took a trade on that one. And that's it. Gold, more than confident with gold. If I go back to the monthly, we're seeing exactly what we want to see on gold. You see a really, really strong reversal on the monthly. We're getting a pullback this month, obviously, because of the recent rally in the market and the kind of bullish nature, or this so-called bullish nature that we're seeing within the markets, is obviously keeping gold at bay, but I'm very confident gold's going to hit 2100. And obviously that bodes well for PAXG, because that will just continue and do the same, minus a slight deviation. In terms of broader markets, the Dow, can't stand it, don't like talking about it. The S&P, getting a nice little run on the S&P, but again, are we really seeing anything anything amazing? No, we're just seeing basically a pullback into an extremely strong level and a huge liquidity pool. We drop down to the weekly to see what that looks like. You can see the reaction from this. It's explosive, really strong explosive reversal, stabilizing price. If it continues going, it's got a lot to get through before it would get to, sort of all-time high and create a new all-time high. Obviously the Nasdaq the same, but as I was saying in the previous live, Nasdaq's overshooting. It's more extended, and it is showing a little bit more strength than the other two. But my main focus is on the S&P, because that's where the real strength lies, not in the Dow, not in the Nasdaq, but in the actual S&P as a broader market parameter. So that's that one, and that's it. That's me done, guys. That's just what I wanted to talk about today. I wanted to go through a little bit of Bitcoin, or predominantly Bitcoin, and yeah, I don't mind hanging around for a little bit longer. Don't really have a lot of people on, to be honest. It's a shame, but I believe there's 6 people, 7 people. There might be more. I might be looking at the wrong thing. Yeah, no worries, man. I was talking basically about Bitcoin surge. Literally, the whole thing was just about Bitcoin. And in the last 5 minutes or so, I just had a brief overview of just some of the things like gold, or gold, dollar. Spoke a little bit about the S&P. I'll just mention that one again. Because of this reversal, price is stabilizing up here, and there's quite a lot for it to get through on the way back up. So, even if it goes, we would have to see something pretty spectacular for the remainder of November. Remember, guys, it's 13th of November. We don't really have a long. We've got 17 days left of November, and then things really start to slow down first, second week of December. So, if we're going to see anything, it has to happen now. No, I didn't actually. I didn't. So let me just remind myself. So basically, right, I'll mention this now, and it's. I hope people actually get to this stage in the video, because this is really cool what I'm about to talk about. So somebody asked a question, right, in my Discord. So, Serge, you were talking about basically COVID. COVID was not a natural event. Would that be factored in? And I'm going to focus solely on that for a second. When you look at cyclical cycles, the way the markets move and so on, there's always a historical basis where you can look back and say, okay, there is a blueprint. And when you look at that blueprint, you can say the market does this pretty much most of the time, as long as you wait long enough, right? But COVID was slightly off. It was different. It was not expected. It just came out of nowhere. Can we factor that into the markets? And the idea was, presented based on Elliott Wave, right? Now, Elliott Wave is the study of human psychology, effectively herd mentality, and that waves form based on what people are doing, right? We see it in the charts, and it's just a way of mapping human emotion, fear, greed, all this good stuff, right? So would COVID cause a deviation in the way that the waves are showing up? Would COVID and whatever happened with that, because it was so unnatural apparently, would that cause an issue with Elliott Wave? Would it still validate it? Would it invalidate the wave count? And so on and so on and so on. And my argument to that was no, because it is factored in, right? And then the question becomes, well, how is it factored in, right? How can you factor in something like that when you're doing a wave count, when you're doing analysis, when you're doing, all of the normal things that we're looking at? And my answer to this was behavioral psychology shows up in many, many forms, right? And I gave the example of my wife basically about 6 months before, anything to do with COVID was even mentioned. She was like, oh, people are going to start getting really sick. She just had an intuition, And what happens is when people walk around and they're going around their daily lives and everything else, they see things. Subconsciously, they notice things that are slightly out of place, things that are just not quite right, something that they hear on the news, a little bit of something over there, a little bit of something over there, and they start to piece it together. And there will always be, if you take 100 people, there'll always be 3 or 4 people or a small percentage of people, right, that are just like super, super on it. There will be the next level of people that are kind of almost on it. Then there will be the kind of, people in the middle that just don't really care. And then you have people on the, the complete end of the spectrum that are just like, vegetables, right? So what happens is this small group of people, 10%, 20% of the global population, they slowly start to notice these things, right? And then they will affect 2 or 3% of people around them. Oh, did you hear about this? Or, oh, do you know what? I saw something the other day. It was really weird. It was this and that and the other. What do you think? That's what happens. And then ultimately, that 2 to 3% of that 20% starts to grow exponentially eventually, right? It starts slowly, but then the growth is exponential. It's insane. Because 2 to 3% of that initial 20% of people who are noticing these things, they really start to notice, and it really starts to kind of really go out, and the 2 to 3% start to affect more people and more people and more people and more people, and before you know it, hundreds and hundreds of thousands of people in a very small area, are starting to talk about it, tweet about it, message about it, and so on. And then what happens is, eventually, everything catches up. So the question is, well, would that 20% or 2 to 3%, what if they're not invested in the market? How would that show up on a wave count? How would that show up on, and I'm just going to keep moving around the charts because it's getting a bit static. But what if all of those people have nothing to do with the markets and don't even invest? How would that factor into the markets, yeah? Would we still be able to see that? The answer is yes, because everything is integrated, right? All of us are integrated into the monetary system in one form or another, right? And it goes back to one of the biggest, I guess, manipulations, right, of the markets themselves. And I have to be careful how I'm saying this because YouTube is really annoying, and it just kicks you off. But go forward on the premise, right, that you are absolutely 100% being manipulated, period, yeah? There's absolutely no question about it. The markets are manipulated. We are manipulated. Even just, Black Friday, absolute classic example, right, of just 100% manipulation, of consumers. People are nuts on Black Friday, right? And they're all manipulated into buying things. They just don't get it, yeah. But Black Friday, Cyber Monday, there's always something, right? So we're all part of one organism, yeah. That affects the next part, that affects the next part, that affects the next part. And it all filters into the markets in one form or another. It just does. It's just the way it is, right? So we do see these counts. We do see these waves. They are factored in, even if it's an unexpected event, yeah? And I don't know if you guys have ever seen, I don't know if I want to say this, I don't want to give anything away if you've not seen it, but Jack Ryan, the one with Kevin Costner, I think it is. You know, there's a particular event in that, right, that's supposed to unfold, right, and then the action that they're trying to do comes after that. So for those of you that have watched it, you will know what I'm talking about, and for those that haven't, I'm going to try and put it into context to really hit this point home. If you look at something like a Black Swan event, again, 90% of people will say that was unexpected. Maybe you can look from the past all the way up to that point, and you can start to connect the dots. And there will be some people, like a crazy person like Michael Burry, who saw something that nobody else saw, these types of things. But the general populace, or most people, they just won't see it. They'll look at a Black Swan event and say, oh my God, it was crazy, it just came out of nowhere, da 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 da. Well, actually, it didn't. Yeah. I've always believed, even from a very, very early age when I started to look into the markets, right, that one, they're super, super manipulated. And two, as I went through multiple crashes, even mini crashes, I started to realize, right, that the crash itself is hiding the manipulation, the theft of funds, right? And it is theft. It's a transfer of wealth. So when you see one of these insane movements that happen out of nowhere, Black Swan event, that will be, going back to Jack Ryan example, that will be what hides, what we see in the markets, in the charts, that will be what hides the actual manipulation, the transfer, the big money that's moving around in the background, right? So all of this is factored into the markets. It absolutely is. The one thing we can't do, or at least I've not found a way to do this, is to see the crash before it happens. Yeah, I'm really good at picking levels, but the one thing that I've never been able to do is actually pick a crash. I can feel it coming. We just know things are all kind of gelling together, and you're like, yeah, we're going to see something soon. Just like we keep saying, there's going to be a stock market crash. I absolutely believe there will be. But you can't really pinpoint when it's going to happen, and you can't say, yeah, the way the chart's forming here, yeah, it's probably going to happen just there. It's very, very difficult to do that, and if you do that, it's pure luck. So there's just some thoughts on that. The other thing was, if Elliott wave theory says euphoric run into the end of the year is possible. Well, I mean, I don't know, Serge, to be fair. I mean, if we go, because remember, I don't use Elliott wave. It's kind of all melded into some of the stuff that I do. But if we just take a look at the monthly chart of the S&P. Let me see here. I'm just going to do a basic count. 1, 2, 3, which is the longest impulse. 4, maybe we peak out at 5. I mean, we could be on a wave 5 right now. So you've got your 4 pullback. We could be on a wave 5, peaks out, and then we start the corrective phase, the A, B, and C. That is possible. That is absolutely possible. If you're going to take the count as just a simple count, a 1. I know it's a bit crude, but 1, a 2. Forget all of this kind of back and forth stuff. It's just because you could say, well, it's a 1, a 2, and then a 3, and then it's an A, B, C, and now it started a 1. And the pullback on the 2 isn't steep enough for me for this to be a 3. Because if it is, that means the stock market's just going to keep going and going and going on a 4 pullback, which is what we're seeing now. Or this would still form part of the 3. Then we're going to see a 4 or another corrective ABC, and then we start another. Nah, forget it, man. It's just way too much. For me, it's just a 1, 2, extended 3, impulse 4, and then we could see that peak at 5. Probably around about 5.2. Let me see. 5.2, 5.3 before we start to pull back, which would be insane. Yeah, I don't think that's going to happen. I think if we do hit all-time high and create a new all-time high, we might start to drive towards 5,000, but you're going to see a pretty steep drop for me. Also, you don't think it's crazy that the markets are muted the first trading day after? Yeah, I do. I think it's absolutely ridiculous. Yeah, this is something that I've been saying for a very, very long time, and we talk about this a lot in our Discord, right? Everything that we're seeing makes absolutely no sense. It makes no sense. It makes no sense. How many times, right, have we seen market movements and we can at least tie it to 3 or 4 or 5 pieces of information, and we can say, yeah, okay, that kind of makes sense. Yeah, it's manipulated, but at least it makes sense, right? Everything's backwards. Everything's completely backwards. We've got banks going under that we don't even know about. The ones that we do know about didn't really affect the market at all, right? The ones that were supposed to destroy cryptocurrency didn't. The Moody's downgrade is supposed to affect the market. It hasn't. Interest rates, the way we see them, and the lack of movement in the market. You can say, yeah, but we've had a really nice run, or we had a nice run and then a decent pullback. Whatever. The point being, we're not seeing, not necessarily a like for like or a one for one, historical reference. When you look at historical references and you say, okay, it is a one for one. It's not like that. But we're not seeing what we're supposed to be seeing. I don't know if I just came off there. One sec. Sorry, guys. I'll just get disconnected. Nope, I believe I'm back. Okay, that was strange. Yeah, that was really weird on my end. Sorry. I thought I might have just got kicked off. So, yeah, we're not seeing things that nothing's matching, basically. We news comes out, or we hear about some, and it's not just news. We're talking about like solid stuff, like exactly what we're talking about. Moody's downgrade, or a bank going under, or some, like Evergrande, for example. These are big problems, that should move markets, but we're not really seeing it. We're not really seeing it. So, is it concerning? No, I don't know. I don't know if it's concerning per se. And this is why I gravitated towards just looking at charts very early on, and only looking at charts, and putting all faith, stock, and value in the charts themselves, right? And then anything else was secondary for me. And this is why, as the time's gone by and I've learned to understand charts the way that I understand them, I'm able to capitalize on that, in a very calm and collected way, as opposed to when I used to look at everything and try to figure all of these things out. That's when my trading was all over the place. I didn't really make money, and it was my investing was terrible. Like, I was such a terrible investor. Like, trying to invest was, like, for me, very hard, because I'm a scalper by nature. I just want to get in and out and just move on. I'm the guy that uses a lot of money to make a decent amount of money and do it in the shortest possible time. When you'll get to a point where things just become so difficult to use that type of size, you have to scale. And that was kind of the birth of me being able to invest and hold over longer periods of time. But that was the later stages of my investing. It was really not easy, to be fair. So yeah, that's that. I hope what I said answered the questions. But going back to behavioral psychology, trust me, it's factored in, man, 100%. So that's that. Not much else to say, guys, unless anybody wants to have a chat or talk about anything, in particular. Been going on now for about 40, almost 50 minutes. Yeah, so I'm happy to kind of, stick around for another 2-3 minutes, 5 minutes, whatever. I'll give people time if they want to chat, or post a question. Oh yeah, free gender as well. I appreciate the $4. I noticed it came up in a different colour, and my eyes were like, whoa, because it's like blue, like it's in your face. But yeah, that all goes into the pot. Cheers, man. It's crazy. Yield curve were inverted for 16, so it's negative for 16 months. Yeah. There's a lot of things that we're seeing, Serge, right, that absolutely make no sense. Yeah. They just don't make any sense, and it becomes a little bit of a what's happening there on that? Yeah, it becomes a little bit of a scary one, because you're like, well, if the market isn't reacting the way it's supposed to be reacting, what does that mean? Yeah, how do we factor that in? Are we seeing things that are a shift in the way that we view the markets? Is there a seismic change coming? Is there an introduction of and I apologise, well, I'm not going to apologise for the wind, but it's really windy outside, so you might hear that. But is there something different coming? Is there an introduction of a global system, that we are struggling to understand how it forms on the charts? And I think one of the things for me is to always simplify things. Yeah, this is why, I like to, if I just go to the first chart of Bitcoin, you simplify things. You say, look, I've got a level up here. It's a rebalance point. Price is running towards it. It's probably going to hit it, right? You know, we've got a level down here. There's a load of liquidity down here, right? And then there's a really strong level at 32. Bitcoin starts to pull back. I'm expecting a bounce at 32. If it doesn't and it keeps going, then I'm expected to, I expect it to get below here. That is really it. We pull back to 32, it bounces. If it doesn't bounce, it's going to go through it. If it goes through it, the likelihood is we're probably reaching for 24,770, right? And that's it. So when you simplify things, it makes everything else so much easier, and then you don't have to kind of drive yourself crazy trying to figure all this stuff out. Me and my friend, sorry man, I don't know why this emoji thing's in the way. Me and my friend were discussing big three are coming in 2024. Corporate debt turnover, which has to be refinanced at rates they can't handle. Absolutely agree. Subprime auto loans, absolutely agree. And commercial real estate mortgages, 100%. Yep. Everything that you just said. Plus, obviously real estate in general, residential, absolutely. People are already defaulting on their mortgages. People are already defaulting on their debts. There's going to be a lot of unsecured debt write-offs. That's going to be happening. People are a lot smarter now, so they can, they're trying things on, in terms of the way that they're trying to discharge debts and these types of things. But the general consensus is that, debt in general is being foreclosed on. Yeah, that's the best way to say it. And whatever form that debt comes in, it is being foreclosed on. People are struggling to pay, and it is an interest rate problem, and obviously there's other things that we have to take into consideration, but generally that's about it, and all of that factored in, it's literally default. Yeah, when you have mass defaults like that, it affects everything, and economies collapse because of things like this. I'm about 5 minutes behind. The news has stopped correlating with the markets because the crash is already incoming. That's my take. Things are already in motion, and now there's no need for pretense. I absolutely agree, mate. What's going on, Lobo? And again, if you just boil it down to its basics, yeah, the basics are something's different. Things are bad. We're seeing no real news, right, or positivity in terms of what we're seeing out there. There is conflict in the world, okay, and there's not enough money to go around, right? And we have the addition of a new market, the cryptocurrency market, right, which allows people to basically steal, manipulate, take, and create exit liquidity over and over and over and over again. So that broader money gets spread really, really thin, right? And you have pockets of people who are basically manipulating cryptocurrency. Just as if you look at the stock market, and we know the stock market's manipulated, but obviously if you go back to sort of pre-electronic stock market, the stock market was stupidly manipulated, and any early stages, well, the early stages of any market or market creation, it's very easy to manipulate. But then it has to become a little bit more sophisticated, as time goes by, and you have sort of new technology that takes over from the old technology, makes it a little bit harder. But insider trading will always happen. There's absolutely no question about it, man. Insider trading will always happen. If you have two people doing insider trading, and one person is giving the information and the other person is acting on that information, and they both make money, do you really think any one of those two people are going to say anything? Of course not. So there will always be that, always. And unfortunately for us, because of the introduction of cryptocurrency, it makes it very, very difficult, to see the inflow of money. And I'm not talking about looking at it on the blockchain or COT data or anything like that. I'm talking about it makes it very difficult to understand and see the inflow of money being spread across, now, what is now an additional market as well. It just means our job is so much harder, effectively. But ultimately, default's coming, and they're already here. And I believe the start of the crash was in 2017. I've mentioned this before, and I've also mentioned the war side of things. And it takes generally about 6 years, for all of this to kind of filter through at this stage of this cycle of this huge movement. In terms of a shift, sort of a global shift that we're seeing. And this is all based on, sort of historical views, but predominantly about, sort of herd mentality, behavioral science, all of this type of stuff, and understanding the way people think. And obviously, we're we're just in a much different world right now. You've also got to factor in something which I don't know if people think about this. I do. AI manipulates everybody. We're all in boxes, guys. Right? This is why I came off. Predominantly the main reason why I came off. Twitter or X or whatever it's called now, is because of AI. I started to notice, right, that the narrative, even though I forced X to do. I forced X to give me a narrative, right, that was based on what I was trying to get it to do, and it still put me in a box. Yeah. And it's not like, well, they just turned on AI and it did that. It's always been there, right? It's just more sophisticated now. So AI puts you in a box and it only shows you what you like to see, right? And if it's only showing you what you like to see, then you will effectively be manipulated into viewing the world a very specific way. And I don't like that. I don't want to view the world in a very specific way. I want to see the world for what it is. I want to be able to notice, do you know what? That's not that chart movement was just wrong. That just doesn't look right. It's a bit weird. Why is that happening? Not to be manipulated by X or Instagram or any other social media platform, right, into believing that movement didn't exist, not see it in the first place, and that everything's hunky-dory, or there is a crash coming, but it's under their conditions. It's under what you're being told it is. No, I want to see it for what it really, really is. I believe there's a market crash coming. It's going to be pretty horrendous, and I don't think many people are going to survive it, to be honest. And I maintain that. It's a shame, man. All the good stuff is at the end of the video. All alive in this case. So yeah. All right. So I'm going to shoot, guys. I think there's some great information in this video. Obviously, the first half is sort of talking about Bitcoin and some ideas on a pullback. This is the chart that we were kind of working through on the weekly, just to give you some ideas. And for those that are really late, we're talking about 100,000 and the distance from here to there, and there's plenty of movement, and etc., etc. So it's really worth watching that if you want to understand at least what I'm thinking. And then in terms of saving the crash till after the election, yes, possibly. And I'll say something about that before I shoot. And then obviously the second half is just talking about general market stuff and some ideas. So saving the crash till after the election. Possibly, yeah. I mean, look, the US elections are going to have a profound impact on the world. It just is. Regardless of whatever your political persuasion is, whether you're for Trump, against him, whether you're for Biden, against him, whether you appreciate Republicans, the Republicans, or appreciate the Democrats, or hate them both, or like one, it doesn't matter. The one thing we can all agree on is this: the impact that it has in the US, right, creates conflict. It creates, this kind of civil unrest. There is this huge divide across many, many states and across the whole of the US, effectively, and that is going to spill over, and it makes it worse because the US has guns. That's basically it. The US has guns, and the Constitution protects. They think it does, to be fair, but it's always, the Constitution is solid, but it's manipulated so much the way that it's used, and you have sort of legal and lawful and and so on. You can't even say I'm protected by the First Amendment, the Second Amendment, and the Third Amendment. It doesn't even matter anymore. So there's going to be civil unrest, and it's going to get worse and worse and worse until eventually there will be a civil war. And I say that openly. I honestly believe that's going to happen. You've got to understand something, guys, right? The US is actually imploding from the inside out. Yeah? Whether it's deliberate or not, it doesn't matter. The US is literally falling apart, right? And it's going to continue to fall apart until the dollar dies. That's it, right? And when that happens, we'll be in a completely different place. Obviously, things would have changed by then, but that is going to happen. Before I leave this, I say that. I shouldn't really say that because who knows, man, I might go tomorrow. But assuming I've got another 10 years in me, whatever, 10, 20 years, blah, blah, blah. In my lifetime, I will see the dollar disappear. Yeah. And I stand by that statement. And I'm glad that YouTube will keep this video forever. We are going to see the dollar disappear. There may be another variation of it. There may be something different. But the dollar as we know it today is going to disappear. Yeah, it is literally going to crash, and it's literally just going to cease to exist. In terms of a world reserve currency, it just is. It just is. Yeah, it's just the way it is. History tells us this. We see it. We see the complete disregard, for America across the entire world. Now, that doesn't mean America still isn't strong. But the reason I'm talking about all of this, and to go back to what you were saying, Free Gender, it's because whether America is being portrayed like that deliberately or not, everybody in the world thinks America is a joke, right? Biden's an absolute lunatic. You can't even string two words together. 14% or 15% of people. I read this somewhere. I can't remember where. So much going on in my head. But only 14% of people believe, or who voted for Biden, are happy with his stuff, and what he's done, and believe that he's made things better. Everybody else doesn't. He hasn't made things better. He's made things a lot worse. And there's been more manipulation and more. Remember, guys, we live in a world, right, where, and I'm again being cautious how I say this, we live in a world where we are presented with information that is so damning, that the person who's involved in that should be arrested and thrown in jail immediately, right? And it just becomes a circus show. It becomes another season, episode 9 of season 6, and so on. It's just a show. It's just a complete farce. It's ridiculous. Literally everybody, that is in the White House should be arrested and thrown in jail. But they're not, because it's just a show. It's a film. It's a play. It's a theatre. Yeah. We need to be focused on outside of all of this and understanding, that you need to position yourself where the end result is you reduce the impact of all of that as much as you possibly can. That's it. It's like prepping for survival, effectively. I'm an American, and I hate that you know more about my country than about yours. Yeah. But that's how it is. A lot of people are focused on America because a lot of what America does affects everything, Whereas if you say, and this is not, I'm just trying to pick up, like Cyprus, because I'm Cypriot, right? Cyprus is my country. Whatever happens in Cyprus doesn't really affect anything else. Cyprus is just used and abused and bastardized, That's what they've done to my country. I could tell you all the history of Cyprus, but the reality is it hasn't really affected much else out there. If something dramatic happens in Cyprus, it's not really going to affect Europe or the US or the continents. But if something happens in the US, it does affect everything globally. And it's not just because of the dollar. It's because America is, dare I say, still a superpower. I don't think it is, but it's classed as a superpower. It's a big, it's one of the big ones. And ultimately, it's always been at the forefront of a lot of things that happen in the world. So it is going to continue to affect everything until ultimately. I said this once, and I'll say it again. Right, a saint in the Orthodox Church, right? Because I'm Christian Orthodox, once said, this was back in 1917, said, America, you who feed the world, will yourselves go hungry. Yeah. And I've always found that quite interesting because, regardless of whatever, one's beliefs are, this statement itself actually makes a lot of sense when you think about it now. So in 1917, this person said, America, you who feed the world, will yourselves go hungry. Yeah. And ultimately that's what's going to happen. Not just because he said it, it's just the way it is. You can see that that's what's happening to America. It's getting destroyed from the inside out, and ultimately you kind of have to go through these cycles of absolute chaos, and madness, and it's unfortunate. But the end result will always be the same. You have this kind of implosion, this dip, and then things slowly start to get better and better and better. And I think as we kind of get towards probably the tail end of 2028, I think. Seems like a long way away, but we know it's not. Time goes by so fast. But the next 3 to 5 years are going to be key. I think we'll see a lot next year, and then I think we'll be in a much stronger position. And what we do now ultimately is going to affect how much we have, to play with, as the years go by. So, with all that said, I hope everybody found. I hope everybody found the information that I presented today good. And as always, I really appreciate you guys sitting with me for over an hour. I think we've gone through a lot. Do you know what I might do as well, guys? To make this a little bit more fun or a little bit more sort of focused. Yeah, you're welcome, Serge. I think what I'll do is maybe just start to get a bunch of general questions right in the Discord. And then we just talk about them, within a video, because then at least that way it's not just me rambling about a bunch of stuff. We kind of organise the live streams to be a little bit more particular, So maybe do some analysis, and then we'll go into some questions and just really break down the market and start to talk about these things, because we all have a lot of info to share with each other. We can all learn a lot from each other. So, the most important thing is that we stay on top of what we're doing. That's absolutely key. We stay on top of what we're doing. We stay close to the markets, and position ourselves, in a good spot. All right, guys, I'm going to leave it there, and I will speak to you really, really soon.